Welcome to Access a Trader, the #1 community for high-level traders to learn valuable trends and strategies, connect with other top traders, and become consistently profitable. Click the link in the description of this video to receive a special offer on our revolutionary PS60 training, access to our daily chat room filled with experienced traders, and so much more. Space is limited, so make sure you don't miss out. We look forward to seeing you in the room.
Hey guys, good morning everybody, and welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing great. Hope everybody is having a great weekend. My weekend's a little bit different. As everybody knows, I've been going through this massive, just a massive strain on my neck. I have a incredibly severe pinched nerve, and I started therapy for it. And I would rather, let me just say this much, I would rather get hit by a baseball bat than go through rehab of a pinched nerve. It's the most excruciating pain. And the second thing that I did, which I think is the most underutilized approach to trading, and it really is the most honest way I can say this, is most traders just don't put in the work. It's just the reality. Most traders just do not put the work. They don't take the necessary steps to cement a foundation for themselves for the future. Again, I don't care what type of trader you are. It has nothing to do with my approach to the markets. It could be anything. If you're an options trader, get your ducks in a row. Make sure you know every moving part of being an options trader. Make sure you understand the risks. Make sure you understand the potential reward. Make sure you understand the ramifications of trading weeklies versus monthlies, trading anything else. So if that's your thing, you have to develop it, right? You have to develop it. If you're trading, for example, if you're trading pivots, right? Understand again why stocks are stopping and why stocks are not moving, why stocks are aggressively going and why stocks are failing. Again, these are all moving parts, which again, just for the last 5 years, again, I've been trading almost now 20. It's gonna be almost 20 years. It's going to be almost 20 years in next March. Next March is going to be almost 20 years for me. And the most important part, what I learned a long time ago, if you're not putting in the work, right? If you're not putting in your work and you're lazy and you're complacent and you're waiting for others to kind of remake the Mona Lisa for you, you're a dinosaur. You're a statistics. You're the Walking Dead. You just don't know it yet, and it's so important. And the one thing that I started doing, I had several aha moments as a trader. The first light bulb that came on is I figured out that, hey, maybe these .com stocks are pretty good after watching the market go off 3-4 points, 3-4 months. The second time around, I discovered pivots. I discovered these pivots 5 years ago, and then I started working on them, started to backtest week after week after week after week until I finally found an edge, and I felt comfortable, and I really felt comfortable to putting on risk. And something happened about 4 or 5 days ago, and it was nothing new. So sometimes you can have something in front of you for years and years and years, and subconsciously you've been using it, right? But you haven't been putting the effort to actually getting alpha out of that particular process. And the one thing, the most basic thing about trading pivots, right? And trading pivots, especially the PS60 process, we believe in channels, right? We strongly believe in channels, and we believe that stocks go from supply to supply to supply, and then they go from demand to demand to demand. And the one thing that a lot of traders, especially in the live webinar, have been telling me, hey, but Dan, can we buy the bottom of the channels, and can we short the top of the channels? And I've always said absolutely. Again, if you believe that emotional buyers, right? If you believe that emotional buyers are coming in and technical sellers are taking advantage of them at the top of the channel, well, why wouldn't you put on a short? And if you believe at the bottom of the channel, if emotional sellers are coming in, right? The emotional sellers are coming in and technical buyers are there to greet them, well, why wouldn't you want to take a position? So it dawned on me that we were leaving a lot of good opportunities on the table, right? We were leaving a lot of good opportunities on the table because, again, we were so fixated strictly on the pivots. And again, I will trade these pivots till the day that my mind can't function properly because I 100% stand behind them and they're phenomenal. But remember, there's only 6 of them, right? There's only 6 of them to the day. Again, we don't trade 420 1-minute candles throughout the day, right? We trade six 1-hour candles. That's all we do. But there's a very, very decisive advantage in between those channels, right? Not even necessarily on the bottom channel or on the top of the channel, but all these areas of interest here, right? There's obviously a macro area and there's a micro area, but there's an area that we could take advantage, right? That we could take advantage in the marketplace that is there for us with defined risk. And I started hearing more and more people in the live webinar trading this way. And I said, well, wait a minute, maybe I should just try to allocate some time actually to this. Because for me, it's all about the pivot, it's all about the range, all about the sneaky candle, all about all those good things, the aggression, the emotional chasers, all that great thing. And 3-4 days ago, I started noticing of like just mini conversations that I've had with people in the live webinar. Like Derek, for example, trades this one stock, literally this one stock, off of demand all the time. I started talking to Roberto, and Roberto kept saying, well, yeah, I've been buying the bottom of these channels for months now, for 6, 7, 8 months now. And I started saying, well, if there's something to this, let's pursue it. Because if you're a trader, again, understand this thing. Stock patterns, right? Stock patterns, they go away. Okay, they go away because of the new technology and all these new players that are involved in the stock market, quant models, algos, just a tremendous wave of day traders. All these patterns, right? All these patterns that people are so fixated on, eventually they become irrelevant, right? The most important part is price action and where price action occurs. Obviously, for me, it's between the lines, right? It's between the lines, the supply, demand. Very, very basic. And I noticed there was, in the beginning of the week, I noticed there was a very, very, very specific move. And I think that move was in Netflix, that I think we shorted Netflix in the beginning of the week, and it stopped on support, okay, but not at the bottom of the range. It stopped on support, which I started back testing yesterday, and I really, really confirmed. We'll obviously discuss that a lot more throughout the week in the live webinar. But I noticed when I covered my Netflix short, and it stopped really at this main channel, literally at this middle channel of the market. And the next thing it did was bounce back like $3.50 over the next 2 hours. And that really, really piqued my interest. And I started in earlier the week, I started putting on test orders. Again, I do not believe that you can appreciate any process by, it's a social media word, paper trading. I don't believe that. I believe paper trading is a complete waste of time. There is no real emotional, as much as we try to take the emotions out of trading to begin with, you're not tying in any emotional ties to the actual fundamental activity. So when you're putting on a bet, right, and that's what trading is, again, it's not gambling, but when you're putting on a bet, okay, you're putting on money for a future outcome. Isn't that putting on a bet, right? So you're laying down money on a future outcome, right? On a future outcome. Shouldn't you understand all the ramifications of what can happen if you're wrong? Not just, well, I bought it, I bought it fixed, I bought it in my account and then I sold it higher. Yeah, that's great. But you just missed 8,000 of other moving parts around the trade. So I started back testing. With some test orders, very, very small shares, but test orders nevertheless. And that first day we did it with Amazon short. That worked for like 2-3 points. Not the big move in the world. I also did it with, I think it was Square. Okay, Square. Oh no, excuse me. That first day I did it with Alibaba. It's got a small little bounce. Again, I still really didn't know how to control the trade. But for the next day on, for the next several days, I started putting on very modest size on all these trades. And they did very well. And they did very, very well. The one thing that I did when I started back testing, and it kind of confirmed, right? It kind of confirmed on these bounce strategies of selling into supply. The one thing that I did realize was, and again, it's kind of basic, I'm not reinventing the wheel here, but one thing I did really recognize was if a stock is incredibly strong, just on a daily macro structure, what you want to do is have the stock kind of drift. Okay, you kind of want to see it drift into some sort of support, right? Obviously, again, it's not reinventing the wheel. But what I did see was when it hits that 5-minute band within that 60-minute channel, or the lower Bollinger Band, that's when you get the biggest potential bounce. And as we started seeing that throughout the week, for example, yesterday, I did it on 2 trades, right? I did it on 2 trades. I did it on NVIDIA, right? I traded NVIDIA twice. Yesterday. First one was the actual breakout. We'll talk about that in a second. But I bought it right here, and and you can see the move. You can see the move off this intermediate middle line. You can see the move right over here. And I bought it at the bottom of the channel here, literally within 12 cents of the low of this channel. And the stock went up like $1 and change, right? Stock went up $1 and change, and you can see how easily it went up. There was absolutely no resistance. It's not like you're buying a breakout and you see all these buyers, sellers, the stock goes up 30 cents, and then goes down 40, and then the natural buyers come in because they clean up the sellers. It's such a, and you guys saw this in the live webinar every single day. It's such a effortless bounce in a weird way. It's such an effortless bounce because people on the other side of the trade don't understand why it's moving down in the first place, right? So there's no aggressive selling on this middle band, and they started moving it up. And here's another example, right? Here's another example of a stock, NIO, right? So NIO, and I traded NIO, and I don't know why I traded NIO on Friday, but I did. And I wanted it to test out this bounce strategy, right, with the stock. The one thing that I do know, when the stock is very, very aggressive, and this is what I found over and over again when I was back testing yesterday for almost, nearly 3 hours. It took a lot of my day yesterday. But what I noticed, and it kind of confirmed, I kind of noticed that in the previous days, but it kind of confirmed this. When you have a very aggressive volume stock, okay, the one thing that you don't want to do, or you might want to consider doing, is letting it overshoot the support, right? Letting it overshoot. So for example, NIO was very, very aggressive on Friday. It's usually something I wouldn't trade, but I just kind of wanted to test it out via kind of everything that was moving at that juncture of the morning interval. I think the only thing I traded at that point was only NVIDIA. So we let it go through. If you can see here, the bottom of the channel right here, we let it go through this whole support because there was just so much volume there, right? There was so much volume. So we let it go through. It actually overshot it like by 70 cents. But what I did was, and again, I back tested this, so I kind of, and not only did I back tested this, when I started back testing pivots in the first place, I kind of know what happens when they reclaim a level. And when if you guys notice, for all you guys who did take this trade with me on Friday, when it reclaimed, right, when it shot right back up and it reclaimed this level, the stock actually went. You know what I'm saying? The stock actually went pretty aggressively, right? It actually went very, very aggressively. And it really did confirm a couple of things. When you're trading a stock, for example, like an Amazon, right? Like an Amazon, we saw the bounce play on Amazon the whole week. And congratulations, I know a lot of you guys did very, very well on Amazon for the whole week. But when you have a stock, for example, like Amazon, and it's trading on a 60-minute channel, keep in mind, sometimes Amazon will trade $1 spread and 100 share lots, okay, be very, very illiquid. And if you notice here, right, right, and here's an area where you can see clearly. You can see a bottom of the channel bounce, right? But sometimes it's going to overshoot, right, guys? Sometimes it's going to overshoot. And I noticed that on my first short on Amazon. I think it was on Monday. I think it was on Monday or Tuesday when I was doing the test size on this thing. And what I noticed on a stock like Amazon or Google, or even a Tesla, right? Even a Tesla, because again, Tesla sometimes now trades a little bit thinner, right? Trades a little bit thinner in a bigger spread. The ones that are trading thinner, okay, they might overshoot. So the easiest entry on these things off the bottom channel or off the top, let it go through, right? Let it go through. And then when it reclaims, you can get long on that reclaim off the original number and obviously use the low, right, of the overshooting low as your max pain. So that's pretty decent as well. The one thing that I also started to notice about this very, very specific bounce play is two very, very specific lines, right? Two very, very specific lines of action. The strongest bounce plays, obviously, we'll talk about that in the live webinar tomorrow. But the one thing that stands out more than anything, kind of the structural balance of how to trade these stocks, the stocks that are very, very strong, okay, the stocks that are very, very strong, the pre-10 o'clock move, you can take them for a bounce off the bottom channels, okay? You can. The stocks that are weak, right? The stocks that are weak, you don't want to, because what we've seen in the past, especially in the short pivots, they go through these support zones like nothing. So when they're underneath supply, right, or underneath actually demand, right? When they're underneath demand on a macro stage and they start going into support on a 60, there's a very, very strong opportunity, strong chance that they're going to go through. And that's why we see some of these aggressive shorts just go straight down the toilet. And sometimes we catch them, sometimes we don't. So it's very, very important to understand. And the same thing, to the long side. If you're in a very, very strong chart, like for example, a stock like Square, right? A stock like Square has just been on a massive, massive uptrend. And what I've noticed when I started back testing yesterday, the stock could be going very, very aggressively into a 60-minute support, right? It's a 60-minute supply, and it just goes through, right? And it goes through because again, there is no fear, there is no panic sellers, especially when the rest of the market starts to retrace. So all these things are, again, this is all a work in progress. Last week was the first full week that we actually started trading these things. This week, my goal is obviously to put more size on. Towards the end of the week, I started putting on third size. I'm still not into that point that I'm doing full size on these things, but I do like what I see. And what's good about this bounce strategy or this fade strategy, again, there's two sides of the market you can trade. The great part about this strategy is that even if you miss your window with the regular pivots, especially in the first 3 hours of the day, say you, for example, you just can't get going through the day, this gives you an incredible legitimate opportunity, okay, to actually trade in the afternoon and trade these ranges back and forth, because again, the risk is very, very defined, both to the top and the bottom of the range, and the market is much more orderly. Okay, you're not going to get that aggressive volume. We want the aggressive volume in the morning for the pivots, but we don't want the aggressive volume in the afternoon for these range plays. We want them to be very, very light. We want them to hit the top of the channel and fade very lightly. We want to hit the bottom of the channel and just lightly start to uptrend as well. Because again, the last thing we want, right, is any aggressive moves, especially on thinner volume in the afternoon. So this is definitely a work in progress. I am super stoked and excited. Did I just use the word stoked? Okay. But I'm super excited about the potential on these things. I've been getting just an exorbitant amount of emails, people talking about the capabilities of these things. A lot of you guys already started trading them. Pretty good stuff, pretty good stuff. So I'm very, very excited about going forward. But let's talk about the rest of the week, right? Let's talk about the rest of the week. NASDAQ 100 reclaimed the 10-day moving average, reclaimed the 5-day moving average. This is super bullish, right? This is super duper bullish. The longer we stay above the 10-day moving average, the better it will be, right? The better it will be, again, if you believe, and again, we covered this all on the nearly 4-hour workshop, the PS60 theory. And again, for all you guys who are missing that edge, right? And you just can't get going, I strongly suggest get the workshop. There's so much great content in there that you cannot find anywhere on social media, on the internet, on YouTube. Again, I created the system 5 years ago, and again, it's pretty damn good. So there's really a defined arbitrage in there, and you can see we talk about reclaiming supply, distribution channels, everything that you need to understand why stocks stop, why stocks keep going, and why stocks can't get started in the first place. It's a lot of content. It's nearly 4 hours of breaking down the process incredibly. But again, the one thing we did cover in nausea, right, was reclaiming and trading channels. And the most important part, when you look at the macro picture of the NASDAQ 100, right? When you look at the NASDAQ 100, it reclaimed the 10-day. It reclaimed the birth of the trade. So now it's very, very important, right? It's very, very important the NASDAQ 100 starts building off of those levels. The only thing I don't like, and again, I always play devil's advocate. I'm not, I don't trade with blinders on. I don't believe in rose-colored glasses. I always play devil's advocate. So what we saw this week was a lot of really good aggressive action. The one thing I don't like, or what I didn't like the follow through after stocks made an attempt to seize aggressive macro channels. So here's my point. So Netflix, we've been trading the whole week, right? Netflix, we've been trading the whole week. I've been tweeting nonstop Netflix, been trading it nonstop Netflix this week. I've been putting it in the private Twitter feed. So all you guys who are members of the private Twitter feeds, you see this constantly, nausea, Netflix. And the one thing that I didn't like on Netflix, okay, that I didn't like on Netflix, after it reclaimed this 50, right? And the next day we had a really good trade on it. What I didn't like that it got rejected off this double top. Now, again, it could be strictly a pregnant pause, and they could test this area on Monday, the 361 area, reclaim that again and start moving forward. Everything will be good. But from the point of interest, just from how strong the market was, right, it really should have exploded through this whole entire range and went back to the 380s level. But again, it could still happen. Same thing with Amazon. Again, if you've been following me on social media, I've been giving levels after levels after levels. 1975, 1988, 2000. All these levels. I've been tweeting. And again, I believe if you live your life in real time, you should be trading in real time. So, what I didn't like what I saw on Amazon, it had every opportunity to really get to this 2047 level, right? It reclaimed this 1988, it reclaimed this 2000, it went to 2009, and then it kind of just drifted right back, and it closed right underneath the 5-day moving average. Again, not great. NVIDIA, just again, I'm not saying this market's going lower. I'm just playing devil's advocate. Again, you cannot trade on one side bias thinking it's your way or the right. You're going to get crushed like that. You have to understand both sides of the market and really be prepared to see, to see a potential devil's advocate situation play out. Now, again, NVIDIA. Again, we talked about NVIDIA on Friday. Again, this 277 level was big. And I said, hey, look, there's a shot against this 279 level. And it did. It got to 279.10. I just didn't like the fact that it sold off $3, right? $3 from that move of supply. Again, can it reclaim that back in the beginning of the week and start reclaiming this 279 area and go back to the 290s? Absolutely. But it's just something that didn't sit right with me. So I want to kind of watch it. Tesla. Look, Tesla's just, what are you going to say about Tesla? What are you going to say about Tesla? It's just, again, I don't care what, the average investor will look at this and say, wow, what a mess. This stock is just phenomenal. It's just a phenomenal stock to trade. The funny thing is I put on 4 trades on Friday. I put on 2 NVIDIA trades, NIO, and 2 Tesla trades. I made money on 1 Tesla trade, and I know why I lost money in the other, and we'll talk about that in a second. But this overall, from the whole week, it's just an absolute monster of a trader, and really, really good. And it looks like to me, at least to me, from the short term, it really needs to reclaim this 300 level. If you guys can see here, the supply here on the macro area is 299.76. So any close, right? Any close on Tesla above this 300 area, again, you can see the levels, and it goes to 305, and then it goes all the way to 310 to the 315 level. So it's very, very important to understand. But it is acting better. Again, will another headline come in and destroy the stock? And again, the bear case, again, blah, blah, blah. Funding going to zero, executives leaving, okay, whatever. The bull case is, well, it's not really a car company, it's technology. Elon needs to kind of step away and everything will be okay. Yeah, they're both right. They're both right. Can you see Tesla at 0 in 2 years? Absolutely. Can you see Tesla at 500 in 2 years? Absolutely. Again, I'm going to try my best technically to enjoy the ride on both sides of the equation. And it'll always have a good place in my heart. And again, hopefully you guys are treating it this exactly the same way as a trading vehicle and not an emotional opinion. Is very, very important. So let's talk about Friday's action. Some of again, we don't pick, again, and the people in the live webinar and the people who are in the private Twitter feed. Again, we don't pick and choose these things to put on social media. These are the pivots. Okay, I don't put out 200 pivots. These are the pivots. And again, look at the time. Adobe 271 is important to build. Well, again, why is 271 important? Okay, again, majority of the traders out there have no idea why 271. If you look at this chart, right, and if you forget about this move here, if you look at the chart and say, well, what about 271 is so important about these levels? That again, that's the whole point of the sneaky pivot. Most traders are looking at the top of the channel here, which is 273, and they're looking at the bottom channel here, which is 261. Now, why is 271? Where did I get this number out of thin air? It's not thin air. These are stocks, and again, we go through this in nausea at the PS60 workshop. Again, people don't know these supply zones are there. They could trigger a massive potential move. And again, if you look at the candle here, right, 271 is the top here. This candle right here is 270.50, right? And we talked about it right here. 271 is super important. Why is 271 important? And watch what happens. right? Takes out 271, right? Explodes. Stock goes to 277. Again, big move on Adobe. Congratulations for you guys who caught it. And again, here's the video. Okay, here's the video. So 277, huge macro area needs to build. Again, that's the daily chart, right? 276.35 is the pre-market highs. It's a very important level. It got upgraded, street high upgrade. Now again, here's in the video, right? Here's in the video as well. So here's the video. So here's the pre-market high right here. Stopped at 276.35, exactly what we talked about. I said it. That's the sneaky area. If you want to get into that area, that is the spot that is a structural part of the macro channel that could get confirmed and lead to a trigger higher. So it broke this 276 area, right? 276.35 area. We talked about the 277 area. Why? Because again, look at the high here, 276.93. Again, it got rejected off supply, right? 276.93. So we know the macro area, right, is 277. We know the micro area is 276.35. And it both confirmed, right? It both confirmed. And you see this really big move here to the 279.10 level. I caught this thing. I bought this thing 277. And oh my God, I totally forgot how much what I did on it. 278 and change, I believe. And then the stock went a little higher. But again, technical analysis. There's no trick photography. There's no editing. It's all about technical analysis. And again, here's another area of interest. Here's another area of interest. By the way, I kept on tweeting it out kind of as a teaser. Trust the orange line, right? Look at these bounces. Trust the orange line. Again, this is part of the bounce process. And then again, here's the next trade. And here I got clipped. Here I got clipped on my first entry on Tesla. I got clipped. And the reason why I didn't realize it was a double top on the 60-minute channel. And I did the re-entry. The first time I lost money on the trade, I did the re-entry on it. 291.70, 292 big area needs to build. Now why? Why is that area big, right? Why is that area big? If you look at the channel right here, look at these channels right here, right guys? All this channel right here, all this supply right here, right? All this supply right here represents that 291.70, 92 level. So I bought it the first time. The only problem is the stock only went up about 50, 60 cents, right? The problem is I didn't see that the high here was 92.54, 292.45, and it stopped at 292.55, right? And it started rolling over again. I didn't realize that. If I realized that, I would have just used break even as my stop. So I lost money on the first one, but once it reclaimed, right? We use the word reclaim. Once the stock reclaimed, I bought it back and the stock exploded. I mean, the stock absolutely exploded. Very big move, confirmed this whole channel. Again, are these entries, you got to be a superhuman being sometimes. Again, these pivots work incredibly well, but sometimes, again, even me who created this damn stuff, sometimes I'll overlook the obvious. And that's why it's so important, guys, to really understand levels. And once in a while, one will get past the goalie. Like, the first one, I just didn't see there was a potential double top here. If I would have saw that, I would have just said, hey guys, this is buy the 293. And this thing put up a $4 candle. I mean, that's how aggressive these pivots can become. And again, 99.9% of people, they just don't know that there's an area of arbitrage that you can take advantage of this market. Again, the only people who trade this stuff is us. That's it. There's nobody on the whole planet that trades these pivots just the way we do. So hopefully you guys had a good week. For all you guys who are joining us, via the live webinar, morning strategy starts out at 9 a.m. Okay, 9 a.m. Eastern time. I think that's it. I think that's all I need to know. For all you guys who do want to finally look at these pivots, guys, I'm telling you, the workshop is incredibly important. We put it out at such a very affordable price that we don't want to put it out for thousands and thousands of dollars. It's very affordable. It's less than $300. And the most important part is it will give you a different look of the market that you're probably not seeing. Once you get that look, it's so important. That light bulb would come on. And for all you guys who are trading these 1-minute channel, 5-minute channels, if you can just tweak it and just stretch that out a little bit and see this via the 60, there's a very good chance that light bulb will go on. Guys, have an awesome week. The rest of you guys who are getting this email, you're getting the option flow. You guys are getting everything that we're watching for Monday. Please get to morning strategy at 9 o'clock Eastern time tomorrow. And for all the rest of you guys, God bless. Have a great weekend, and I'll see you all tomorrow. Take care, guys.